Hello, welcome to the Stock Play of the Day Overtime. Today's stock was Square, symbol SQ. We'll discuss, did we score or did we fumble? This week, we looked at symbol SQ, Square Incorporated, and we looked at a short put spread in Square. A short put spread is neutral to bullish on that underlying. And we had the chart looks very interesting since the Monday call. Now, every stock play of the day is always on Monday, and it's always right around the noon hour was when we kick off and go live. So here's noon on Monday. We see the underlying stock was trading right around 75. And I've drawn here on this graph a segment that goes right along the 75 level, because in that call we kind of mentioned chart-wise, 75 was a fairly important level. We had a big gap down. If you look at the daily chart, that happened right around this level. And we see that once we broke through that 75 level after the noon hour, we actually saw that underlying stock do a little bit of a run up, came back down, touched, then made a big run up. Now this is the end of the day on Monday. And it looks like we had a bad opening. Market came down, but once again, got back to the 75 level and held back, and it went all the way up to the 78 level. Now, in our short put spread, the strike that we sold was the 72 strike. We never came anywhere close to that. The closest we got here was right around 74. So there wasn't a ton of concern in this type of movement. And you went half a day's worth of trading and almost a full day's worth of trading before we even got back to the 75 level when we first put on this trade. Well, and then obviously we see a big turn down, and we finally got all the way down to that level. Hopefully you would have probably been out of the trade by then. And then if you just stuck your head in the sand and you put the paper trade on Monday and came back on Friday, well, you did very well, because right now the markets are live. We are taping live, and we see that the underlying stock is above 70. It's 79.17 right now. So it's actually making a run as we are talking about this underlying trade. Now, these are always meant to be paper trades. We never mean them to be recommendations, but I just want to look at that trade right now. So if we pull up the Ally Invest option chains, we see the stock right here. This is a live quote, 79.14. It's up 94 cents on the day. We did the shortest term expiration because this was really a speculative trade. We were just looking for that breakout through the 75 level, and we were hoping that we could capture some time premium. And we talked a lot about the implied volatility staying high in Square, even though they recently announced earnings. So we had inflated volatility, and that leaned us towards doing that short put spread trade. Okay, so see here we have half a day's worth of trading. May 15th expiration. We sold last week the 72 strike put, and we bought the 70 strike put. So here in the Ally Invest option chains, we got the puts on the right side. Here's the underlying stock. This is our little check boxes. If you click once for a buy, twice for a sell, and we see that if we look at this trade, there's nothing left, right? The underlying stock has gone up. It's rallying right now to 79.20. So here's the biggest question is, when would you have gotten out of that trade? We did this entire trade. It was done for a net credit. We're seeing it right now. The midpoint is at 1 cent. So you'd probably just let this trade kind of ride and hope that it would expire worthless if you were still in our paper trade for this week. But when we did the trade, it was at 45 cents. So this is one of the rules of thumbs. If I am trading a short put spread and I can close the short option contract or the total spread, because your risk comes from the short option contract, for 10 or 15 cents, I'm going to do that every time. I just don't want to have that risk, especially if I'm doing it, and say by Wednesday when we saw that run up, maybe we might have had that possibility to close it out for 10 or 15 cents. I definitely would have did that, either by buying the short option back or closing out the whole spread. So the order would have been, let's sell to close, or I'm sorry, let's buy to close our 72 strike put with the May 15th expiration. Or we'd say, let's buy to close our 72 strike put, sell to close our 70 strike put, and do that for a net debit to the account to remove the entire trade if you'd like. All right. Well, simple trade this week. We'll see you this Monday for the stock play of the day. Please don't forget to hit subscribe and ring the bell. And we'll be back. And we tape live every Monday at noon Eastern time. Thanks for coming.